From operator Bharti Airtel, which has managed to beat estimates on almost all fronts in the Q1 performance. What's particularly encouraging is its India margin figure, which has come in at a 9-year high. Reema Tendulkar here to take us through the numbers. Reema, Airtel's managed to really ring in some cheer for the second quarter in the row.
Yes, Bharti seems to have delivered a good set of earnings. The consolidated revenue growth is at 2.5% quarter-on-quarter. Margins have expanded to 37.5%. That is driving a profit growth of 13% QOQ to 1,462 crore, which is much higher than even the highest estimate on the street. Now, the positive surprise on the margins, this improvement of 70 basis points that we've seen quarter-on-quarter is largely driven by the India wireless margins improving, though Africa too has contributed. So India wireless margins at 42.4% have improved by nearly 240 basis points quarter-on-quarter. And I think margins for India wireless would have now gone back to those 2007 levels. So the execution of Bharti Airtel has been rock solid when it comes to India. Africa margins too, despite a very challenging quarter on account of the Naira devaluation, Africa margins too managed to inch up a tad bit, up for the third straight quarter in a row. A couple of the other highlights. India's revenue growth is not great. It's lower than what we've seen in the past. So the volume growth is just at 2.2%. Though the positive is that voice pricing, after declining for 7 straight quarters, has managed to show an improvement of about 0.7%, though data volume growth continues to moderate. In the past, it was at 100%. Then for the last 3 quarters, it was a 70% data volume growth year on year, and that is further slowed down to 55% this quarter. So moderation in data growth, despite accelerated investments made by the telcos, is a bit disappointing. But on the whole, there is a margin surprise, which is why this is a good set of earnings.
All right, thanks, Reema.